Welcome! You're viewing the video version of the Santu Pirls Stock Market Commentary featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart for January 24th, 2016. Market breadth. With this past week's market advance, our Bull-Bear Point and Figure ratio at 0.38 rose from 0.14 last week and continues in strongly bearish territory. The total count of securities in bullish or bearish patterns fell 12% to 3,387. The count of bearish stocks decreased 27%, while the count of stocks in bullish patterns increased 94%. The Santu Pirls PNF Market Breadth Summary Chart shows us a market now 33 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe free of charge to the email version of the Santu Pirls Stock Market Commentary, simply enter your email address in the provided space. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 185 points for the ninth decline in 21 weeks. At a negative 976.42 points, it continues below all 7 tops above plus 100, has now fallen below the October 2014 and April 2015 bottoms, and continues below the remaining 3 of the 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 4 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode on higher average daily volume. Momentum. The CCI 20 daily at minus 60.59 has not generated a valid zero-line reject short entry signal within the plus or minus 50 range. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 8 weeks ago, while the daily CCI 20 began a Woody's downtrend 5 weeks ago. The CCI 20 weekly now has 3 weeks below zero and is outside the plus or minus 50 range for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. 4 of the top 5 industries are positive, and all of the bottom industries are negative. Bullish, Comp Tech continues in the top 5. Computer hardware has entered the top 5. Gold and silver has entered the bottom 5. Semis has left the bottom 5. Bearish, brokers and KBW Bank have entered the bottom 5. Disk drives continues in the bottom 5. REITs has left the top 5. Oil services has left the bottom 5. S&P retail has left the top 5. Focus this week from www.zerohedge.com, the one chart which explains why markets are falling down, by Tyler Durden. The following is the one chart with some key points that explain its importance. Since it is now common knowledge that it is all about central bank and rigged markets, the next logical step is to predict what happens to markets when looking at asset prices from a purely central bank liquidity standpoint, aka the Austrian money flow perspective. Why are markets all falling down? The answer by Citigroup's iconic and one of Wall Street's very best, analyst Matt King, who adds that, quote, many investors have been struggling to explain the magnitude and violence of the recent sell-off. Why are EM and commodity price weakness proving such negatives for DM as a whole, end quote. Does the market know something the economists' model don't? Or is this an exceptional buying opportunity? We think there are 3 reasons EM and commodity weakness will continue to matter for DM. They suggest that markets have been following global rather than domestic central bank liquidity, and that it may be difficult for them to stabilize without significant further central bank stimulus. We hope that after they see the following chart, which shows not only DM net liquidity injections, that is quantitative easing, but also EM net liquidity outflows, that is quantitative tightening, and which explains not only the recent sell-off, but also shows how to trade global central bank and sovereign wealth fund and reserve manager flows, all confusion and denial will end. Thank you for tuning in for this week's Santu Pirls stock market commentary video featuring the proprietary Bull Bear Point and Figure market breadth summary chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.